everyone. Thanks so much for joining us. My name is Jim Glade, and I am the publisher at Espacio Media. We own about 40 digital and print publications all around the globe. I'm here and happy to be joined today by David Dorr, who's the co-founder of Coro Global, a fintech company that's created a new financial payment system where gold can be used as a currency in everyday transactions. David, thanks so much for being here with us. I wanted to mention that when I first heard about this, my mind went back to prospecting times. I see guys taking gold out to buy a whiskey in a saloon. So tell me a little bit about why Coro Global is kind of bringing this up to the new age, maybe the technology behind it and why it's relevant today.
Sure. Thank you for that, Jim, and pleasure to be with you this afternoon. So yeah, you're right. It does certainly stoke memories of saloons and the gold rush in the West. And what's interesting is we need to kind of bring some of those memories back. Financial market participants tend to have a little bit of financial amnesia. Few people really remember just 10 years ago when we had the last financial crisis. And that's very common. And what's unusual for us right now in the times that we live in is that we haven't been on a gold standard. We haven't used gold in the saloons for many, many, many decades. Mm-hmm. And since the 1970s, we haven't had anything backing our money. And the concept behind Coro was to resolve that. Gold has served mankind as money for 5,000 plus years, but it's not really convenient to use in modern fashions. And what you see is, look at Bitcoin as an example. What's the enthusiasm around Bitcoin for the last decade? You ask anybody that's into Bitcoin, they call it digital gold. And our thesis is, well, let's not pretend. Let's actually use real gold. We don't have to use something other than that. And we modernize that with modern technological infrastructure.
Fantastic. So I guess maybe then you can kind of lead me into your beef, let's just say disagreement with fiat currency and with crypto as well. And you kind of alluded to it, but if you could dive in a little bit deeper, what's wrong right now with our financial system and what it's backed on?
Yeah, that's a fair question, and we'll maybe unpack those in two portions here. So the problem with paper currency is that there's just no limit to how much a bank can print of it, and we're seeing that this year alone. Using the United States statistics as an example, we printed an additional $3 trillion out of thin air. And these numbers get so large and astronomical that I think the average everyday person, or even financial professionals like myself that have to work with those numbers on a daily basis, we lose touch with the magnitude of what that means. $3 trillion in extra stimulus or extra currency circulating around. And it's really quite simple. If we were to double the money supply tomorrow, let's say just magically we could snap our fingers and the entire amount of US dollars outstanding doubled in everybody's bank account. Well, then the price of everything would go up by double. Your electricity bill, purchasing a new car, a hamburger, it doesn't matter what it is. However, when money is printed, it doesn't hit the economy evenly. If tomorrow everything doubled and we all doubled our incomes, doubled our bank accounts, it wouldn't really be a big deal. It's just the amount of everything is priced as twice as much. But when it's printed and it just comes out of thin air and it trickles into the economy, first through the banking system, then through large corporates, and then eventually leaks its way down to individuals, it stretches apart society. This is one of the reasons that since we've been untethered to a gold standard, you've seen a gutting of our middle class in the United States. And you see this big stretch in all countries. You see in a large, wealthy, high class, and then a very, very, very growing population of low income. And this is endemic with paper money standards. There's just no anchor to that. So that's the first part there. And that's why, going back to the last financial crisis, 2008, 2009, that's when Bitcoin was born. Because smart technologists recognize that, hey, paper money is unsustainable. Anything that can be created out of thin air doesn't have an anchor to it. What if we could create something that had a fixed money supply or a fixed number of tokens in the case of Bitcoin? And that's how Bitcoin was born. Now, I think one of the hottest topics out there right now, and it's probably the number one debated thing in the crypto space, is Bitcoin versus gold. Right. And this is one of my favorite topics because I don't think anybody ever does the public justice by explaining this correctly. So if you'll permit me a moment, I'd like to break this down in pieces for anybody that's going to be listening or paying attention to this. First of all, fundamentally, what's the difference between Bitcoin and gold? Okay. So when Bitcoin came out, we had a lot of our own clients that said, hey, I want to invest in Bitcoin. It's just like gold, but it's in a digital format. And our response was, well, that's not actually true. Now, they have some things in common. So let's start with that because that's what the public is most used to. There's limited supply. Okay. So gold has a limited supply. Bitcoin has a limited supply. Okay. 1 point for each of them. Second, the increase in that supply is at a pretty fixed rate. So the what we would call the inflation rate of the money supply, or the amount of tokens available with Bitcoin, it increases by a certain percentage a year based on the miners. Well, they did that. That actually replicates the historical inflation rate of gold. So gold, the amount of gold pulled out of the ground over the last 100 years adds approximately 1.5% per year. It's been pretty steady over the last several hundred years. Okay, 0.1 again. So in this, they're even. Fixed supply, fixed inflation rate. But here's where things start to differ. And this is important for everybody to understand. There is a fixed supply to Bitcoin, but there's no barrier to entry to creating other digital currencies. Okay, so I'll repeat that. There's no barrier to entry to creating other digital currencies. Ethereum's come out and 40,000 plus other digital currencies since. So there's no barrier to entry there. Now, gold, on the other hand, is an actual element in the physical world. It's an element on the periodic table, along with only a small number of other precious metals like platinum, silver, and palladium. And unless we get hit by a meteorite that introduces some sort of new precious metal to the periodic table, there is an actual real barrier to competition. You're not going to see 40,000 physical metals. Doesn't exist. And everybody skips right past that. But that point is extraordinarily important because it means that there is a barrier to entry to compete with physical metals, whereas there's not a barrier to entry to compete and try and create a better digital token. And we've seen that over the last 10 years. That's been evidence. Everybody's saying my token's better than your token, and everybody's trying to win the digital token battle. So that's a key part. The other part that's very important, and again, people in the Bitcoin community, they either don't know or they're not interested in sharing this information. Technologically, Bitcoin is broken, okay? For something to be money, it needs to be a medium of exchange, a unit of account, and a store of value. Now, the way that early blockchain technologies were developed, and the vast majority, they're still used today, even Bitcoin is actually two technologies. It is Bitcoin with a large B, which represents the blockchain, and it's Bitcoin with a little b, which represents the token. And what people don't like to talk about is that you can't use one without the other. So in order to use the ledger, you must use the token. In order to use the token, you must have it glued to the ledger. It's like having a key in the ignition of your car. Now, new cars don't require a key. They're keyless ignitions. We're going to talk about that in a moment with the type of technology that we use. So I still haven't presented to you, though, why is that a problem? So why should anybody care? So what? So there's a token, and that's required to use a ledger, and a ledger is glued to the token. Let's bring this into the real world and talk about the limitation that creates. If I'm a company like FedEx or UPS, I love the idea of being able to track packages on this immutable ledger with a great audit trail. I can see the use case for that. However, if you're telling me that I need to use a token that fluctuates in some sort of monetary value simply to track my packages, I find that a point of interference for my commercial activity. Okay, so that's an example of just using a ledger to track something. Now, let's look at it in the form of money. You go to your ATM. If you're an account holder at Wells Fargo, for example, you could walk across the street to JP Morgan's ATM and pull out money from your Wells Fargo account. The reason you're able to do that is because ATMs are part of a network, and it connects multiple banks together, and you're able to use your debit card pretty much anywhere. Now, imagine that you go in to JP Morgan's, your Wells Fargo account holder, you go to the JP Morgan ATM, you throw your debit card in to withdraw $200 US. But because of the fluctuation of the network that day, your ATM spits out $340 or $170 because that network is stuck and glued to the money.
Right.
You would find that dysfunctional. And by the way, this is the same issue with, and people are going to just hate this. This is the same issue with Ripple. When people talk about Ripple's just, it's a joke. Why would I ever have to go through an additional currency pair? Like if I want to trade euros to dollars, why would I go through a Ripple to get there? It's an interference. And I think this is a huge point that is completely overlooked in the blockchain and the crypto community. And so we believe those things have to be moved out of the way. And those are real, very serious issues. Now, to be fair in the critique, that does not mean that Bitcoin's not amazing. It's absolutely incredible. It was a great first draft to a very complex problem. How can you, in a secure environment, reach consensus in effectively a network where you don't need to trust the other participants? And so it was a great first draft. And so everything that we're able to do today, even at our firm, is standing on the shoulders of giants. But this does not excuse anybody from getting so religious about blockchain to have an honest conversation about the technology. If I asked you to pull out your mobile phone right now, throw it on the table, and I pulled out my mobile phone, and we had a debate about whose mobile phones got better memory, faster speeds, and everything else, we would resolve that. I guarantee you, we just look up the specs of each other's phones. There wouldn't be a conversation. We'd be like, okay, yours is faster or mine's faster. It's pretty simple, right? Mm-hmm. But that's not the conversation that's taking place in the crypto space because everybody's gotten religious about it. And we want to bring back some dialogue so that people can have an honest conversation about really how the tech works, both technologically, and then how tokens and money works economically. So sorry, that's a long-winded response to your question, but hopefully shed some light on some things.
No, actually, it gives me a couple of follow-up questions. I'm wondering, first of all, how have people reacted in the crypto world to Coro, and maybe the argument against the efficacy of the blockchain or of certain cryptocurrencies?
Great question. So what we found so far is that we just launched the product in the US in August. And so most people still don't know about us. And while the data sampling is too small to be of statistical relevance, our early experience has shown that the response is great. Most people simply, they just don't know. And that's fair. That's fair. This happens all the time in markets and different industries every day. And what we're excited about is that the response has been great. When we're afforded the opportunity to explain everything that I just shared with you, you see these incredible light bulb moments and people go, oh, wow, that makes perfect sense. We have not had one single person, and we've shared this message now with thousands of people. We've not had one single person that's come back and said, well, oh, wait a minute, that doesn't make sense. Or let me challenge that thesis, because it's quite logical. So we're happy about that. And we feel outside of attracting customers to our business, even completely setting that aside, we feel responsible, being responsible financial market participants in serving with education to help people understand these things, regardless of using our platform, just so they can make informed decisions and not get caught up with speculating on digital currencies that have a lot of potential flaws and risks with them.
So I'm not sure if this is necessarily your kind of overall mission, but have we gone too far away in our global society of not having a currency tethered to gold to ever come back? Like, do you ever envision a day when we can all go back to the gold standard?
Good question. I mean, our mission is to facilitate that, to make it easier to go back to a gold standard. And what we would argue is that let's go one step beyond the gold standard. The problem and the reason the gold standard became unstable was because the idea was that gold would back a dollar or gold would back another paper currency. But let's just skip past that. Let's not use dollars, pounds, euros, or anything else. Let's just simply use gold. And what's exciting about this is, most people aren't aware, is that when we look at currency codes, so the dollar is the currency code USD, the euro is EUR, and so on. Everybody's familiar with their local country currency code, 3 letters. This was created in Switzerland by the International Standards Organization. Mm-hmm. And so they have a list. You can go on their site and you can see every single currency code in the world. What most people are pretty surprised to learn is that there are actually 4 currency codes that exist that are outside of paper money. Only 4. They don't exist anything else. Everything else is paper money, fiat currency. Those 4 are gold, silver, platinum, and palladium. And the currency code for gold, as an example, is XAU. And that's how we reflect it on our platform. We didn't invent a token. We didn't invent some sort of new standard. 1 XAU equals 1 troy ounce. So there's great precedent to bring this forward and to skip past, trying to back something with gold. Whether or not we've gotten too far away from that, we'll find out. Now, if we look at history, what history's shown us is that we always end up destroying paper currency. And so whether gold will be the winner as we regress back to that, which is what's happened over the last 5,000 years, or maybe somebody does create something digital. Maybe there is some sort of other Bitcoin or digital gold that's just impossible to compete with and blows everything else away. And so while we are very much pro gold, we think that that's the best choice because it's actually in the physical world and has these qualities for that reason. We're certainly open and encourage people to experiment. And I think we're going to still see a lot of that. And I think there's a lot of that in our future. And so the future remains to be seen.
And did you say throughout history, we have reverted back to the gold standard or precious metals?
Yeah, I'll give you an interesting
When was the
stat.
last one? Or, yeah.
Yeah, so there's been approximately throughout human civilization 3,800 plus fiat currencies.
Really?
Every single one of them. So I'm a probability guy. When I work in financial markets, my sweet spot is an area of expertise is measuring probabilities, and that's 100% failure rate, 100%. So as an odds guy, betting against fiat currencies is a no-brainer. Now, some people are like, "Oh, you guys are crazy. Why would you ever bet on gold?" It's not that I'm betting on gold so much as I'm betting against paper currency. Paper currency is not going to stand around. Now, the second part is that, yes, I think gold's going to be the most likely winner of that. And gold touched a 228-year high against the US dollar this year. Gold has set a brand new high against every single paper currency in the entire world just in the last 24 months.
Wow. I'm curious. I mean, yeah, that strikes me as really interesting. When I try to envision it in my head about kind of currencies rising and falling, I think of like empires rising and falling. I'm wondering if, like, is there like an average, or are we due for the US dollar to really fall out? Do you think that that's going to happen? Like, yeah, tell me about that, and yeah, please.
Sure. So if you had asked me even 10 years ago, I would have thought that the dollar probably would have blown up by now. So everybody should take my view with a grain of salt. I would have thought it would have happened. I can share some data points that are interesting though. So we are reaching a level of financial extremism that's never, ever, ever historically been seen. And as one example of this, Jim, last year, when we look at global aggregate sovereign debt, okay, this is the debt that's issued by governments around the world. This is their bonds. So everybody knows governments are going more in debt, but they don't have really good context for how much and the distortions in financial markets. Last year, we topped 17 trillion in government debt with a negative yield.
Wow.
I've never seen that in my career. I don't know any historical precedent for that of this magnitude. That's supposed to be impossible. That means that you're agreeing up front. You're saying to a government, like right now in Italy, Germany, Switzerland, Norway, all these markets, you could lend the government money for 5 years, 10 years. Last year, it went all the way out. You could lend the government in Switzerland to 30-year bonds. So it's a loan to the government when you buy that bond. And they're telling you up front, Jim, we're not giving you all your money back. Not only are we not paying you interest to borrow the money, but we're going to tell you up front, we're not even going to give it all back. Now, this is crazy. Now, I don't think that the average retiree or pensioner in Europe or the United States or anywhere understands that. Imagine, though, when they do. So we're coming to the end of this gigantic, never before seen debt super cycle. And again, history is a great teacher with this, that in cycles of such large scale amount of debt, which are much smaller than what we're seeing right now, it implodes and the system has to reset. So we've been avoiding that by just blowing bigger and bigger and bigger financial bubbles. Another example of this, and we'll have to fact check the exact data because I don't know that I've got this measured to the exact amount of trillions. But McKinsey did a report a couple of years back, and they were looking at the amount of outstanding debt after the last financial crisis, the 08-09 great financial crisis. And governments around the world, the G20 came together and said, wow, this is a debt saturation issue. That's what's wrecked markets, leading with, mortgage bonds for houses in the US. And we need to all come together and agree to lower the amount of debt outstanding worldwide. And so McKinsey did a report a couple years back and said, well, let's look and see how well we did. how well did we do? Did we lower that amount of debt outstanding? Of course, we know the answer to that.
Well, yeah, what's the
No.
guess?
Not only did we not lower it, we didn't even stay even. We've increased it. And I can't remember what the number is. I'll get the data point for you, but we increased it by trillions and trillions and trillions of dollars, straight north. So this is just from a mathematical perspective, it's completely unsustainable. And we are on the precipice now when you start to arrive at negative rates where bonds, you have to pay to lend somebody money. It suggests that we are well into the end game of this type of cycle.
So tell me a little bit about what this looks like when we end the cycle. And let's just say, for argument's sake, that we do revert back to the gold standard. So what does that mean for me as an everyday consumer in my transactions? What does that look like? And maybe you can tell us what that looks like now, enabled by technology like Coro.
Yeah, good question. So the whole concept behind Coro is that Coro is not going to prevent the next financial crisis. Gold standard is not going to prevent it. There's none. We are too far over the edge that there's going to be massive debt defaults. But the intention of having such fluid, easy, accessible technology is that we will be able to regrow much faster. So this doesn't save us from the financial crisis. It's I use a funny example. If you've seen the movie with Liam Neeson, Taken, have you seen that movie?
Yep.
Okay. There's a phenomenal trailer for that movie that's profound. It just hits right at your heartstrings when his daughter's under the bed. Some people have broken into the house and he's talking to his daughter and he says, listen, this is what's going to happen next. They're going to take you. Right? It's a very powerful moment in that trailer. And for those that are listening to this, please pull up the trailer on YouTube and watch it. This would be my message to folks in financial markets. They're going to take you. Financial governments have wrecked the markets. They're going to take you. So we can't avoid that. We have to be honest and have an honest conversation that's we're going to have some pain coming. The question is, what do you do next? And the idea is that if we can provide stable money so that people have something they can rely on rather than the money continuing to deteriorate. And a great example of this is Venezuela, right? So Venezuela got taken, if you will, and they're still being taken. That's the problem. So they had their crisis and they're still living every day in a deepening crisis. And at the heart of that is a constantly deteriorating currency. So our mission is to say, okay, listen, the crisis is coming, but you're going to have a tool to come out the backside. You can work with your neighbors, cafes, suppliers, whatever it is, and you guys can opt out of a broken system where that money continues to deteriorate. And they can even start doing that now. They can start prepping for that transition. And the beauty of being able to use Coro, just giving ourselves a nice plug here, is that we make it as easy, that's part of our thing, we make it as easy to use gold as you do dollars. And you can use both in our system. So it's a nice on-ramp, off-ramp for that. And it's convenient in your everyday life. So for people that are interested in starting to transition to that now, we make that easy. And it's noteworthy, Jim, that in the United States, there's now more than 7 states. In 2011, Utah was the first state in the US to pass state-level specific legislation recognizing gold and silver as legal tender in the state. So you can pay your Utah sales tax, you can pay the government and pay them in gold. Now, most people don't know that, even Utah citizens, but it means that there's a framework that was born out of the last financial crisis. So there are these things coming, and we're here to facilitate that, both pre, during, and post crisis.
And again, to kind of differentiate from cryptocurrencies, this doesn't necessarily need a high adoption of people to work right away. Like the value of gold that has always been there, right?
Correct.
So if I were to say, listen, I'm going to kind of divest some of my money from stocks, etc., bonds, and invest in gold and start working right away on transacting with that, that's something that can happen pretty instantly.
That's right. Yeah. So that's, I'm glad you asked that. I never really thought about it in that format, but it does bring something interesting to mind. We are not dependent on any type of network effect. Gold has and is used. It has a tangible value that is you see in liquid markets every single day. So there's already a huge, long historical backing and liquidity for that. We're just bringing it back as money, which is its rightful role. But we're not, as a company, we don't have this DLT system that's dependent on some type of mass adoption for it to prop itself up. Whereas, of course, the other digital currencies, it's exactly that. If they don't have that, then they don't have anything.
Sure. Well, what about, for example, like, cafes, bakeries, whatever, adopting payment systems? So I'm thinking in my head, Apple Pay, for example.
Sure.
Obviously they have to get on board in order for me to be able to pay Apple
Of
Pay.
course.
What about with Coro? Can I go into a store right now and pay with gold, or what's the future of that look like?
Great question. So yes, in that sense, of course. So when we start getting into commercial applications, being able to buy a coffee or anything else, yes, it would be dependent, of course, on a merchant being part of our network and having an account with us.
Right.
And what we see though is the first bridge to that for customers, and one of the tools that we'll be rolling out next year is that there will be a Visa card attached. Actually, excuse me, I believe it's a Mastercard debit card attached to the accounts at Coro. So people will be able to walk into any merchant that accepts MasterCard and be able to use their Coro balance there. Ultimately, of course, we want those same merchants to have their own Coro accounts with us. That helps remove the friction and the costs and makes it more convenient for all sides.
Interesting. Very interesting. So maybe right now you can tell me, hey, what's the profile of, kind of your early adopters, the people that are using you now, and where are you hoping to target in the next year, let's say?
Yeah, we see. So we're federally licensed in the United States at the federal level, and we have 15 U.S. state licenses, as well as being licensed in the District of Columbia as of this conversation today. And we're working on licensing across the whole U.S. and just now starting our international licensing. So the U.S. is our first market, is where our users are based right now. And we see in the U.S. there are three market segments that make a ton of sense for us and are natural adopters of our platform and using our services. The first one is, of course, starting with gold bugs, as they're affectionately known. People, the millions and
Yeah,
millions
what's
of
a gold
Americans.
bug? Please tell me.
Yeah. So a gold bug, I think that term's been around for a while. It's basically somebody that's a big fan of gold. They believe that the financial system might melt down. They don't trust paper money, and they hold gold under their mattress or in their IRA accounts or however else they invest in it. But they believe in the narrative behind gold as we do. I guess I would have to classify myself as a gold bug, since I basically founded a whole company around bringing people back. So maybe I'm a super bug.
Makes sense.
Marketing to that community first and foremost is the low hanging fruit. It's preaching to the converted. And so we're very eager to give them an easier way to have access to physical gold and not have to store it under their mattress. Of course, they can do that too. They can get the physical gold from us. They always have title with us, which is something unique about our platform. So starting with that customer segment, the millions of Americans that are gold buyers and holders of physical gold to begin with. The second segment for us is the millennial population, the fastest adopters of fintech. And we can see this evidence with applications like Robinhood, which has had an enormous explosion, especially with the pandemic and a lot of people being at home, enormous explosion of users on their mobile app. In fact, in the 1990s, the late 90s, so I've been a trader for a long time. In the late 90s, everybody got into day trading. And that's when you could use laptops and home computers to do it. Now, everybody's day trading from a mobile device. And so there's very fast adoption rate there. And also one of the key factors, with that general demographic of millennials is that's the same community that also happens to be into crypto. They like this spirit of being able to have money that's borderless, that they could use in other places, and which is an awesome vibe, something that we totally support and promote. And they're very eager to try new things. So we see that as a wonderful customer segment for us. And then the third, speaking to our background working in Latin America, I think you and I are both in Latin America today, right? You're okay.
Yeah, correct.
Yeah, so we're both down here. The Latin Americans have lived through many currency crises. Again, citing Venezuela, which is our next door neighbor here, is we're both in Colombia. They're living through that. Brazil's lived through that. Argentina's going through that right now. Argentina's currency is collapsing as you and I speak, as is Turkey, as is Lebanon's currency, and many others. So we see in America, speaking to the international community, the diaspora from Venezuela and elsewhere, marketing to them is a no-brainer because they've experienced it. They understand what it's like to see your purchasing power. In Brazil, when they last had hyperinflation, grocery stores would change prices every single day. And then it got so bad, they stopped putting any prices on the grocery shelves,
Hmm.
and they just started announcing it over the speaker while people were in the store because it could change within the hour.
Wow.
And so again, we see those segments as those are the great starting bases, those three segments.
I have two follow-up questions for that. You had mentioned kind of the millennials, the crypto folks. I'm wondering how you're going to market to them. When I think of anything gold related, I think of those late night infomercials for old people, cash for gold.
Totally.
Yeah, where do you kind of fit in there and really get their attention?
Yeah, I'm glad you brought that up because it's so cheesy. The gold market as it currently exists, it's
Yeah.
really out of date. It's
Hmm.
super antiquated. You think of pawn shops. Yeah, we did some informal surveys just asking, young adults, hey, have you thought about buying gold? Some, yeah, okay, well, I don't really know how to do it.
Right.
People don't know. You don't have a lot of options. It's a pawn shop. It's those late night commercials. You go on one of the online gold dealer sites and you go buy a coin off of there. That's
Right.
that's okay, but that's not really. We're stuck. We're stuck at best. We've only made it up to the 90s, right?
Hmm.
But we're certainly not living in the 2020s, and that's where Coro is a differentiator. Now, our method of reaching out to those audiences is similar to any other companies. We're not running infomercials, but the idea is that we do targeted advertising and digital marketing to those audiences. And what's cool is just in the early test marketing that we've done is they're very responsive. It's great because the inquisitiveness of millennials in particular and the crypto community is, oh, cool. How's this work? What is this about? Wait a
Sure.
minute. You're tying together two of my favorite things, some distributed ledger technology plus gold, which is what I thought Bitcoin was going to be. It's
Hmm.
it's it's cool to see those things coming together.
Yeah, no, definitely. And I mean, it's interesting to me because I definitely don't think of like when I think of millennials, I don't think that they're walking around with a lot of gold. I do think they're walking around probably with a lot of credit,
Correct.
um,
That's right.
more than anything. You mentioned also you touched a little bit on a few countries that are going through economic meltdowns right now, and
Yes.
I'm wondering, obviously this is a global tool.
Mhm.
How does your company navigate regulations in different countries in order to facilitate transactions, cross borders, etc.?
Good question. So let's speak to that because I think there's one thing that the crypto community shares in common, and
Hmm.
it's the spirit of that. There's a general distrust of governments, and understandably, because governments have abused our trust in nearly every country on the planet, whether you're living in a developed market or not. And I'm deeply libertarian at heart. I believe in free markets and borderless currency. I believe in all of those things. And to this is where Bitcoin has really shined, as some of the others have. The reality is, unfortunately, that money transmission and sending money is a highly, highly, highly regulated business.
Right.
And having worked in capital markets and around highly regulated businesses my whole career, there are some really good reasons for that.
Mm.
When you see terrorist financing and narco trafficking money being laundered, you start to realize there's a lot of dangerous people out there.
Mm.
Now, we shouldn't be giving up our civil liberties just because there's some bad apples. There's a better way to do compliance. But the importance of being regulatory compliant is paramount. And that's something that we really pride ourselves on. So our whole team has a very strong regulatory background. We're triple regulated just in the United States alone. First by the Securities and Exchange Commission, second by the US Department of Treasury at the federal level, and then we're licensed at the state level. So that's always something that we navigate. Every country that we operate in, for the most part, requires licensure. And that's a benefit to our users to know that you have the security and you also have the regulatory framework that helps protect you. So we're very big on adhering to that. And even more importantly, we're big on contributing to that dialogue with regulators. In our last fintech business that my brother and I co-founded, we had active dialogue with all the state regulators, helping them understand how to do their job better without putting burdensome regulation, but putting effective regulation. Because that's what the dialogue really needs to be about. It's not so much whether something's regulated or not. Regulation can be great. You have a clear set of rules with how to play and keep people safe. but is that regulation effective? And we're very much interested in contributing to that dialogue globally, to better protect everybody and make sure that their money is safe.
Sure. And I mean, obviously, we're seeing that even in the fiat world, regulations, I mean, if you look at HSBC or any kind of big bank,
That's right.
they're, they're still
There's
getting
holes
caught
all
up
over.
in money laundering. Yeah, exactly. So I wanted to ask, as well, can you tell me a little bit about the conversations you're having with those regulators? Are they
Mhm.
open when you go to them? Are they hard to, hard to speak with? Tell me a little bit about the interactions, and hey, do you feel that, yeah, kind of maybe the ideology or the mentality is changing and they would be open to kind of adopting something like this, or what are your thoughts?
Powerful question. Powerful question, Jim. What we've seen so far, it kind of goes along these lines. I wouldn't say that there's any regulator that particularly gets gold and the value of it. Talking to
Mm,
US regulators doesn't necessarily click. They're
huh,
kind of like, okay, well, that's your thing, whatever. As long as you meet our regulatory requirements and all these stringent tests, then we'll let you operate in the state. But what we have seen that I think is a really positive development and will
mhm,
lead to a deeper understanding from regulators is that because fintech has become so hot, and in thanks to the enthusiasm around crypto and blockchain, you
mhm.
go to every government in the world right now, every single one of them is trying to promote fintech domestically. Here in
Right.
Colombia, they've created a whole sandbox program around fintechs coming to Colombia and contributing to the economy.
Mhm.
That's incredible. So, having worked with regulators across my career, usually it's a very long and slow process. They're not inviting you in. They'll make you jump through the hoops, but it's not an invitation like, hey, come to us. We would like to attract you. So I'm equally as excited as those governments and those regulators are to educate them, help them understand that, hey, maybe this is the right regulation for crypto, maybe it's not, help break down some of the technological understanding and underpinnings. So from that standpoint, fintech in general is a very open dialogue. Gold specifically, there hasn't been a mental click yet, and I don't think that there will be until we really enter a proper financial crisis. But that's
Huh.
that's a great question. Glad you
No,
asked.
no, interesting. So obviously, you approach the conversation from a fintech perspective versus from a gold first perspective.
That's correct. Yes.
Yeah, that's very interesting. I'm curious, what do you learn from regulators? I mean, you mentioned, hey, I'm open to teach them, etc.
Mhm.
But what have you learned from regulators in your experience?
I think the most important thing is that it's not necessary to be adversarial with regulators. And a lot of people take this very aggressive approach. Either one, they try and avoid the regulators, or two, if they've got to deal with them, it's on a very, very aggressive footing.
Mm,
And my experience overall is regulators are people too. They're eager to learn, they're eager to share. And what you find is that the majority of regulators, what they're really concerned about at the end of the day is only a handful of key bullet points: protecting the consumer, making sure that you're not going to steal their money, that somebody else won't steal their money, and that there's really no bad actors that are entering your system. That pretty much sums it up, at least in this regulatory environment that I'm speaking to with money transmission. And what we've learned from them is that um, they're open-minded, especially now, as I mentioned with fintech. They're open-minded, and they're eager to have good companies regulated in their states, contributing to their economies, and overall, they've been very reasonable. And I think it's that human approach that we take dealing with regulators. We've got an amazing compliance team led by our chief compliance officer, Lorenzo Del Zappo. He spent his whole career dealing with regulators,
uh,
and he's a super amicable guy. And I think a large part of his success is having that human level relationship with them, and building it like that, not making it adversarial. So that would be my biggest takeaway that I'd share with others that have to deal with regulators. Treat them like normal folks. They're not there to beat you up. They're there to help make it work for everybody.
Definitely. And I mean, as an everyday consumer, I'm definitely a big fan of that because I know there's, plenty of people trying to take advantage.
Yes.
Um, Maybe you can speak to a prospective Coro user and tell
Mhm.
them about, like, the safety of using the app.
Sure.
Yeah, tell me about that.
Well, there's a couple layers of security for us. So the first thing for people to know is that we are a SOC 2 certified company. Now, SOC 2 certification is a cybersecurity audit. To our knowledge, I haven't come across any other fintechs that went through the capital expenditure to do this up front. Now, normally fintech companies will get a SOC 2 cybersecurity audit later. They're very expensive. They're very intense. It looks at your entire company's cybersecurity architecture, every aspect of it. In fact, for us, we had 114 checkpoints of our audit. Very, very, very intense exercise. So it's important for our customers to know that we have that layer of security. Second, we have the regulatory layer. As I referenced, we have 3 regulatory bodies that oversee us just in the United States alone. Additionally, we have segregated custody, which is part of our legal obligations as well. So gold is held on a segregated basis, specifically for our customers in physical format. We do not create a gold token or any digital format of that. It is real physical gold held with full title for our customers. So that security and peace of mind, knowing that those customers, they have full title. We spent months and months and months with the SEC going back and forth, just explaining to them how we created that type of architecture to even pull that off. We're the first company in the world to do that. So there's independent storage, auditing, and insurance that goes along with the gold. There's independent custody and storage for the cash accounts. So we have to have third-party bank custodians hold the cash for customers. And it's all these layers that stack up for security. Additionally, the hotspot of our technology, the DLT that we use is Hashgraph. And Hashgraph meets, no pun intended, it meets the gold standard of cybersecurity in a distributed network. It's what is called asynchronous Byzantine fault tolerant. And that's a big computer science term that people watching this can go Google and look up. No other distributed ledger technology can claim that. And what that does is it helps with the resiliency, protecting against DDoS attacks, Sybil attacks. So it is truly the most secure architecture for being able to deal in a distributed network. And Hashgraph is famous for its cybersecurity. So we have all these layers, everything from just banking type layers, custody layers, regulatory layers, user title, all these things stacked together to give our customers confidence that they're operating in a secure environment. And I would challenge a customer to find any financial institution that has more layers than we do for that type of protection. We take it all very, very, very serious.
Who does, I apologize if I butchered the name of the test that you went through. Who does the SOC 2 evaluation?
Yeah, so that's an audit. All the major audit firms, I mean, you take any of the big fours, they all do separate audits for that. We had a specialty firm. I get you the name, Kirkpatrick Lockhart, I think. Kirkpatrick something or other was the specialty audit firm that did our SOC 2 certification. And so you can get information about that. It's available on our website. And by the way, that's an annual obligation. That's not something that ever ends. Once you do it, to maintain it, you have to always do it.
I'm curious as well, you have relationships with gold providers. If I wanted to start today, but I don't have a gold bar in my house, I assume I would take some cash, transfer it, buy gold, and then I would have that physically there. Where does this gold come from?
Great question. So the way that we're set up right now is that we are plugged into a large gold dealer. They're called Dill & Gage. They've been around since the 70s. They're one of the largest gold dealers in the world. They're a wholesale gold dealer to over 3,600 gold dealers worldwide. They're based out of Dallas, Texas. So what happens is when a user downloads our app, sets up their Coro account, when they make that transaction, so they can transfer money directly from their bank account, we're piped into the entire US bank system. They then load their account, they have US dollars in there. From there, they can buy gold instantaneously. There's real-time settlement for that. Whether they're $1 worth of gold or $1 million worth of gold, they can do whatever transaction size they want. That is settled and cleared through our back end with our gold dealer Dill & Gage currently, and we'll be adding additional gold dealers over the years as we grow. And it's held in independent custody. So that's held at a COMEX vaulting facility outside of the banking system. Fully insured and audited there as well. So that's how it works. Now, there's a couple features that we'll be adding. One of the things that we've built for is that if you're a believer in gold, you also want to be able to touch and feel your own gold, right? You might say, hey, listen, I don't mind keeping some of it in Coro where I can send it around to family members anywhere in the world, but I want to be able to touch it and see it. So one of the features we'll flip on in the new year is the ability to withdraw the gold directly from your account. It'll come FedEx insured right to your house. So that's one of the features we've been building out for the last year. Ultimately, as we get down the road, we will also give customers the ability to deposit gold into their Coro account. So let's say that you had that bar in your house already, and you said, you know what, I don't feel too safe keeping this here at the house. Maybe somebody will rob me, or I can't transfer it so easily. I don't want to ship the entire gold bar to a family member or a business partner. It'd be easier to have this in Coro. So we'll ultimately have the feature to deposit gold. Now, depositing gold is a whole nother level of risk. We have to melt down that gold and assay it to make sure that there's no abuses or fake gold that's being put in. So you can imagine there's a lot of physical infrastructure that's necessary to make that flow. But that's our pipeline of features that we're setting up for customers.
Oh, that's very cool. That's very interesting for sure. So I guess, can you, I mean, maybe out there, if you want to just give a message or anything that maybe we didn't touch on that you think it's really important to know. And I think for the listeners in this particular podcast, in this video, I would say, hey, we're kind of laymen in the terms of fintech. So maybe if you could just tell me about, hey, how is this going to be more natural for me, and what do you envision this like maybe in 10 years in terms of how we go about daily transacting with gold?
Sure. So I think there's two touch points. Number one, what we're doing is we're committed to making your life easy, right? Nobody wants one more thing that they have to learn how to do. Nobody wants another technology that's in their pocket that requires them to read some sort of user's manual.
Right.
So our job is to make your life easy so that you can transact and save and be able to do that with stable money, and just make that completely seamless in your everyday life. One of the things that I would also add, though, with that, so we make it effortless. You don't have to think about it. You don't need to think about gold and how it moves or anything else. We're going to handle all that mess behind the scenes and do it perfectly for you. The flip side of that, though, the other thing that I would leave users with, or prospective customers and listeners or anything else, is I think that it's more important than ever to take the time to get some financial education and understand a little bit about our financial history. There's so much speculation by people that we're seeing another bubble in day trading. I've seen this movie many times. I know how it ends. The market crashes, day traders get wiped out, they've lost their savings, they don't have any concept of risk management or financial history. I would really, really, really encourage people. We're losing home econ classes in school. Nobody knows how to balance a checkbook. Right. Nobody knows how to manage their credit card debt or anything like that. I think that it's very important to remain committed to base level financial education. And part of that includes financial history. I think that that's a big gap that's missing. And it's interesting. It's not something that has to be boring where you got to go take a class for it. It's interesting. There's tons of information for free on the internet. We're even going to put together some educational things to make it fun and easy to digest for laymen and laywomen. And just make it easy. But it's an important point. We got to stay educated.
I'm curious, do you still hold stocks, bonds? I know you're an asset manager for a long time as well. What does your overall portfolio look like, or did you throw it all into gold?
Good question. In 2009, I did throw it all into gold. And that's not that I'm advocating for that. This isn't, for full disclosure, this is not financial advice. I'm only speaking to my own my own preferences. But the way that we look at it, in 2009, my brother and I did exactly that, and gold saved our butts.
Really,
we bought gold right at the bottom of that sell-off, and it completely saved us. Our business, we had a fintech company at the time. Our clients were Wall Street banks and financial institutions, and those clients were blowing up. Bear Stearns is an example. Bear Stearns was one of our largest clients, and they got completely blown away. And we had realized that during that period, so for the audience, my background's in macroeconomics. And during that period of our last fintech, we were focused in the insurance sector, and we weren't paying attention to any macroeconomics. But the moment that Bear Stearns hedge fund blew up, and also having them as a client, we stepped back and we realized that we were getting ready to enter a very deep and scary crisis. And so with what little liquidity we had, most of our money was wrapped up in our fintech company, but with what little liquidity we had, we put 100% of it into gold and some silver. And that was what allowed us to rebuild and grow and survive.
And does
So
it remain there today?
it does. We still have that same stuff. We've expanded into other things. So yeah, we're very happy to hold those positions.
Okay, cool. So you have kind of diversified again as the economy has kind of bounced back.
Yes, but here's how we've done it. So as an example, just giving you ideas of portfolio positions that we have right now. The majority of our portfolio positions are to the short side. So we're short as we speak, as of the date of this recording, we're short US markets, we're short European markets, we're short US banks, we're short European banks. If you look at our portfolio, we're pretty much short the whole world, with the exception of precious metals. Most of our portfolio is betting that we're going to go back down into a decline here as the second wave of COVID circulates. And the fragility of the financial system, you can just see it. It's like the wings on a plane being flexed in a turbulent storm. They're about to snap off. I think it's a time for people to be very prudent with their capital and their investments. And for those that have had fantastic gains as the stock market's roared over the last couple months and screamed straight up, I would heed caution. Maybe it's an opportunity to take some profits and step back for a moment and be careful. But we're certainly in a bubble.
Is there any kind of maybe on a parting note, because we've talked a lot about the history of finance. I'm wondering if there's any books that you recommend listeners read to really get a grasp of how it's gone up and down. Currencies have devalued. We've gone back to the gold standard. Is there any kind of, is any literature you suggest reading?
That's a great question. Yeah, there's two books I would recommend to everybody. So when I started off as a trader, I was always looking at, I needed an edge. What can help me understand markets better? And this is what led to my brother and I's path to studying macroeconomics. We were turned on to Austrian economics, and this isn't economics about Austria. This is a school of thought that was originated by professors and economists out of Austria. Ludwig von Mises, Friedrich I can't pronounce his name, Friedrich von Hayek, and other Austrian economists. There's two books that I think are really great entry points that are good, easy reads. One is Henry Hazlitt's Economics in One Lesson. The other one would be What Has Government Done with Our Money by Murray Rothbard. And you can probably find both of those books, at least for many years, they were available online for free. People can search around, or you can buy them. They're a couple bucks to purchase. Those books are great. You could read both of those books over the weekend, and you can have a much better framework for how money works, as well as how economics work. And I would encourage listeners to check both those books out.
Well, fantastic. And I wholeheartedly agree that there is a dearth of financial education, and I'm a product of that. And unfortunately, I'm sure kids these days are as well. So yes, that's awesome. And if there's any other, where can people check out Coro? What can they do to sign up if they're interested?
Yeah, so they can go directly to our website. It's coro.global, coro.global, and they can sign up right on the website. If you're in the 15 states that were licensed in the United States, you can download the app for free and begin using it. But all the information is widely available on our website. So we'd be happy to have people check us out.
Fantastic. Well, David, it's been a really great conversation. Thank you for taking the time today to speak with us. And look forward to seeing what the future holds for Coro and for gold as well. So thank you.
Excellent. Thank you, Jim. Appreciate your time, buddy.
All right. My pleasure.